The Bitcoin ETF is coming, and it's going to change everything. That's right, folks. The financial world is buzzing with the news that the US Securities and Exchange Commission, SEC, has acknowledged applications for Bitcoin ETFs from heavyweights like BlackRock and Fidelity. This could be a game changer for Bitcoin and the entire crypto market. But why is this such a big deal? An exchange-traded fund, or ETF, is a type of investment fund, an exchange-traded product that tracks the price of an underlying asset. In the case of a Bitcoin ETF, that underlying asset is, you guessed it, Bitcoin. A Bitcoin ETF allows investors to gain exposure to Bitcoin's price movements without actually owning the cryptocurrency itself. Now, you might be wondering, why not just buy Bitcoin directly? Well, for many investors, especially institutional ones, a Bitcoin ETF offers a more familiar and regulated way to invest in the volatile world of cryptocurrencies. It eliminates the need to deal with the complexities and security concerns of handling Bitcoin directly. But not all Bitcoin investment products are created equal. For instance, you might have heard of Grayscale's Bitcoin Trust, GBTC. While it's similar to an ETF, it's not quite the same. GBTC is a trust, not an ETF, and it trades at a premium to the actual price of Bitcoin. This means investors often pay more than the current price of Bitcoin when buying GBTC. On the other hand, a Bitcoin ETF tracks the price of Bitcoin directly, meaning it should, in theory, trade at or very close to the actual price of Bitcoin. This makes it a more accurate reflection of Bitcoin's value and a potentially more cost-effective way to gain exposure to Bitcoin. Now, here's where things get interesting. While Bitcoin ETFs have been available in a few countries, including Canada for a few years now, they've yet to make their debut in the United States. As we all know, the United States is the world's richest country, with a stock market valued at over $40 trillion. To put that into perspective, at $3 trillion, the market cap of Apple alone is greater than the entire Canadian stock market. That's a massive difference. And here's another fun fact. The total crypto market, which some believe has the potential to revolutionize the global financial system, is also worth less than Apple. The introduction of a Bitcoin ETF in the US could have a profound impact on the global crypto market, potentially driving a significant influx of capital into Bitcoin and other cryptos. The introduction of a Bitcoin ETF is a game changer, especially for the average investor. With a Bitcoin ETF, you could potentially enjoy significant tax savings. Just like with other ETFs, you could buy and sell shares of a Bitcoin ETF in a tax-advantaged account, like an IRA or a 401. For our Canadian viewers, you're already ahead of the game. You can buy Bitcoin ETFs right now through platforms like Questrade, which you can find linked in the description below. If you buy through a self-directed tax-free savings account, TFSA, you could potentially profit from Bitcoin tax-free. The ticker for Bitcoin is EBIT, and the Ethereum ETF is ETHR. The US Securities and Exchange Commission has been hesitant to approve a Bitcoin ETF due to concerns about market manipulation and volatility. However, the tide seems to be turning, with growing optimism that a Bitcoin ETF could be on the horizon in the US. So, why is a Bitcoin ETF such a big deal? Well, it could open the floodgates for institutional investors who've been sitting on the sidelines, waiting for a regulated and familiar way to invest in Bitcoin. In conclusion, a Bitcoin ETF is a game changer. It offers a more accessible and regulated way for investors to gain exposure to Bitcoin, potentially paving the way for broader adoption of cryptocurrencies. That's it for now. If you found this video helpful, don't forget to subscribe to Cash with Callie for more short finance and crypto videos. Until next time.